Now, as we mentioned, this is a big week for corporate earnings. 29 companies in the S&P 500 will report their latest quarterly numbers over the next 4 days, a kickstart to an earnings season that will be dominated by the financials. Kayla Tausche has more on what investors will be looking for from some of the nation's biggest banks.
Earnings season starts in earnest Tuesday. The banking industry front and center. Dow component JP Morgan Chase and mortgage giant Wells Fargo kicking off fourth quarter results at a tenuous time for the country's money centers.
2013 was an all-time record year in terms of bank earnings, but it didn't come from the sale of, we'll say, more widgets at higher margins. It came because the cost structure of the industry was adjusted so that loan losses came down, reserves came down, and actual operating costs came down. 2014 will be altogether different. So the fourth quarter is the pivot quarter.
With rates rising, new and refinance mortgages have slowed. Corporations are doing fewer mergers, and federal investigations have lingered. The latter, a major issue for JP Morgan, the largest U.S. bank by assets, which will take an $850 million charge from a settlement over its ties to Ponzi schemer Bernie Madoff. Evercore analysts say lower trading and mortgage activity could put even more pressure on the bank's bottom line. A shrinking mortgage pipeline will hit Wells Fargo. Analysts at Sterne Agee doubt the San Francisco bank can again plug the hole with money it formerly stowed away for bad loans. Wells will cut costs, analysts say, and investment banking could be a bright spot. Earnings expected to fall slightly. Later in the week, the rest of the sector will weigh in. Wall Street has low expectations for Citigroup a year after a massive restructuring tailored the bank's businesses and its workforce. Bank of America, with many big-ticket items behind it and less housing exposure, could be an investor favorite.
At the heart of it, banks are where consumers deposit income, get loans, borrow on credit cards, an indicator of financial health on Wall Street, but more importantly, on Main Street.
The business of finance is all about confidence. You don't make a loan or take a loan without it. You don't do an IPO without it. You don't get involved more in the investment markets without it. So a lot of the benefit that's going to bestow another doubling of confidence in this recovery is going to fall to the financial industry.
An important barometer for an economy in recovery. For Nightly Business Report, I'm Kayla Tausche.